All right. Good afternoon, everybody. Let's go ahead and get started. Want to welcome you guys here. Let me know if you guys can see my audio and hear my audio and see my screen in the chat box. Just let me know that that is indeed working. Hope everybody's had a fantastic afternoon so far. We're going to make this a short and sweet webinar, but what we're going to do today is some really awesome stuff. I'm going to show you guys how to trade the macro scanner. And by the way, for those of you on YouTube watching this, this is a free scanner for you to use. So this will deliver high quality fundamental trading signals that you can trade. So this is not just something that our group can use, like anybody can use this. So, and eventually I think the macro scanner signals will work their way into Steve Scanner in the future. The way we're going to do that and integrate it is as we continue to prove the fundamental scanners results and value over time. We're going to like as that happens, that's when we'll go ahead and implement it as part of Steve Scanner, which will be really, really cool. We'll talk about that at the end. But basically, what I want to do is show you guys how to make money with the fundamental scanner. I've already started doing this, but I want you guys to start doing this too for those of you that want to trade along. I'm trading the new macro scanner on the website the same way I treat Steve Scanner, where you take the trades at the beginning of the week and you stack the positions as the trades go in our favor, and we use a average daily range stop loss, and we use a position size sequence multiplier to make sure that we're managing the risk each week. So I want to make sure that we go through that so that you guys can do this. Plus, this will give you really good practice as we get back into trading with Steve Scanner again as the government reopens, because the way we trade Steve Scanner is the exact same way I want you guys to treat the macro scanner. For those of you that want to use this. Now, real disclaimer on this, macro scanner is kind of new. It is not something that we've been trading with for a long time. I built the macro scanner 8 days ago, so it is pretty new. That's part of the reason why I'm giving it away for free, but I think the thing is absolute gold. And I want to show you guys the best use of it. Now, there's a lot of thought that went into like how to use it, especially because when you're trading fundamentals, these are things that usually display themselves. These are signals that display themselves over the course of what a swing trade might be. You're not going to see fundamentals dominate the market on a short-term time frame every second of the day. And so we have to have kind of a swing trading perspective to be able to see the value out of a fundamental signal, right? And so I think taking and resetting new trades once a week is probably perfect. And there's a lot of reasons for that, including, and I'll just mention this real quick, like the market often goes from a consolidation period to a breakout period to consolidation period. So if you're constantly resetting 4 times a month, if you happen to catch a week where the market's just asleep, it's not going to affect your account that much. Versus like if you, like if you come 4 times a month to capture a breakout, 2 of those weeks, or at least one of those weeks, is going to be absolutely outstanding, and you're going to crush it, and you're going to make a lot of money on the breakout weeks. And then the other 2 weeks, it's just all about kind of keeping things tight and steady and keeping the losses small. I think what happens to a lot of scalpers out there is they demand results daily. And what happens is when you demand results daily from the market, especially when it's not moving a lot, naturally what happens to retail traders is they put on more positions, they take bigger trades because the market's not moving. And so they try to compensate for that lack of movement by subsequently taking more trades. And it's a death spiral that a lot of traders don't even realize that they're in. And so what's nice about having a sequence or like a scanner like Steve Scanner or the macro scanner is it naturally resets you. So if you have a week where things don't quite go the right way, the market's just doing that because that's what it naturally does. And so when you finally get an opportunity to reset and come back and add to winners like we should be doing and cut losses quick and, have a little bit of a bigger position size going into a more breakout week, that's how you're able to come away with these big, big profits, is because you're having this natural reset point where you're not going into this death spiral when the market's kind of going sideways. And so it's a concept that I've really put a lot of thought into. I've actually worked with the AI and talked to the AI about this very concept. And yeah, the AI is like, yeah, like traders just have no clue that, that's the way the market works. And so like, because of impatience, they go in pretty hard on scalp trades when the market's going kind of sideways, and then inevitably the market will start breaking out again. And if you're caught in a big trade when the market starts to break out, because you come from a scalp environment, that's how a lot of retail traders wind up, losing pretty big. So anyway, this will solve that. Trading with the macro scanner or trading with Steve Scanner and being patient and just taking, you know, all your positions once a week, 4 times a month, that will solve that for you. So, like I said, just want to welcome everybody here. Also, want to give a shout out to those watching this in the recording and through the website, and obviously on YouTube and those live. Want to welcome you guys here. But let's go ahead and get started. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you lose money. All right, perfect. Let's go ahead and jump into this. So let me just show you how to take trades off this, or how I would suggest taking trades off of this. Obviously, this has changed a little bit. Again, I made this scanner 8 days ago, and the most recent update I put into this was on Thursday night. So it's been kind of a fun first week. I think I've got it where I want it. The scanner updates in real time for those of you that don't know how this works. And you can locate this for those of you on YouTube. Again, this is free for now. I think I'm going to allow everybody to use this. And I think what will happen at some point is the signal portion, which is column 2 or column B on this scanner, will eventually get integrated into Steve's scanner over here. What we'll end up doing is I think I'm going to delete the 3-week shift as a percentage and the 5-week shift as a percentage right here. And then somewhere in here is the macro signal is going to get in here at some point, but that probably won't be for another month or so, or maybe longer. I just need to see some more results behind the macro scanner before we go ahead and just do that. But in the meantime, anybody can use this macro scanner. We're going to just let anybody use it. I think that's super awesome. And it's a really cool thing because basically what this does is it looks at fundamentals, right? It looks at GDP, inflation, unemployment, and interest rates. And it takes a composite score, or it creates a composite score rather, between all 4 of these major metrics across every single currency. And it's able to determine, what's the best signal, what's the best thing to buy right now. Right here, you got pound Kiwi and its fundamental score is positive 31. And what that means is between GDP, inflation, unemployment, and interest rate data, that's the best trade to take right now. And you can filter it the other way. You got the NZD CAD at a minus 26. And, between all of its metrics, that's the best thing to sell right now. And so that's kind of cool because this tells you just kind of what the banks are probably interested in buying and selling potentially before the market's even moved in that direction. But rest assured, you've got the best fundamental signal in the entire Forex market. So I'm going to show you guys the best way, I think, or the way that you can, I wouldn't say, I don't like to use the word guaranteed, but the best way I think you'll have the greatest shot at making money, and a lot of it, and how to use this. Because my biggest concern is that people will just come in here and just start taking they'll take their scalp trading lens and they'll start trading fundamental signals with the scalp trading lens. And ultimately you're going to be pretty sad, with the results if you try to scalp these, because these signals are going to play out and manifest themselves over many weeks. And so if you're just resetting every week with new potential trades to take, I think that's going to give you the best shot at having a lot of success. And it's the same thing with the weekly trades from Steve Scanner. So let's go through how to do this. So what I would suggest is you come here at the beginning of the week, or just when you feel you want to reset. I like to just do a natural, start on Sunday night or Monday morning and hold the trades until Friday in the afternoon before the market closes. You just close anything that you still have open. Usually if you've got trades that are making money on Friday, that's probably indicative of the fact that if you've got trades open on Friday, that probably means you're making money, at least on those trades. Because I don't use a take profit with Steve Scanner, and I don't anticipate using a take profit with the macro scanner here. I would suggest that you just don't use a take profit. I know that might sound crazy to those of you watching this on YouTube, but I really just don't. I have made more money not using a take profit this year in 2025, especially with the scanner signals. And there are some times where it's like, dang, I wish I could have taken profit there. But I think we think in a lot bigger sense of the market, like the opportunity to make a lot more money is usually there. And I feel like when you take profits, more often than not, I find out later that if I had a profitable trade that closed out for 50 pips of profit at take profit, I would have made, 200 if I had left it alone. And it's not always the case, but I've learned over time that if over many, many trades and many, many weeks of just doing it over and over and over again, it will pay off. The person who leaves the trades open all week long, especially the winning trades, will wind up being a more profitable trader, and they will have more profits in their account than the person who's constantly taking profits, right? So it's a hard thing to kind of get over, but it's also the thing that most people aren't doing, and that's actually a sign that you're doing the right thing, is when you're doing something that most people refuse to do. um yeah, it's like an example of this is like I could go to McDonald's that's a block away and fill up on that, but if I just wait 3 hours, I can go get a steak dinner with my spouse, right? Like that's, we would all rather the steak dinner. The steak dinner is going to be more fun. It's going to taste better. The food, the quality is going to be a lot better. Or you could just fill up on, whatever. And I think that's kind of the same thing. It's an example that just came to my head. When you hold on to winning trades, you're holding out for something that's much better. You're going to get something that's greater. It's harder to do because that means you're going to have to wait 3 hours or whatever until you can finally do that. But it's the right thing. So it's all about, I think sometimes it's just all about having commitment to doing what's right and what's like principles that will take you where you want to be versus just doing what feels good. You know what I mean? Okay, very good. So let's go ahead and move on from this. So let's kind of go through the process of what it's like to use these signals. So again, these are swing trading signals. You'll probably see on the macro scanner that a lot of these trades will be the same week over week, very similar to Steve Scanner. Steve Scanner is pretty responsive though. Like, I don't think there's been a week where every single signal has been exactly the same. If we get like 8 signals a week from Steve Scanner, I would say most often at least half of them will probably be the same signals from the prior week, and then maybe you'll have 4 newcomers and 4 other trades that leave, and you'll have a total of 8 new signals for the week. With this scanner, I don't know exactly what's going to happen, although I think after a big news event week, you could have a brand new basket of trades. Like, let's say you have a week where a lot of GDP comes out, interest rate statements come out. Maybe you have a lot of news as far as inflation data comes out. Yeah, you might have a new week next week where you get brand new signals. Sure. But I think most weeks you're going to be left with a lot of, you'll be like, oh, pound kiwi was the trade I took last week, and it's the same signal this week. And by the way, that's okay, especially with the way we trade and the way we reset and the way we kind of add to winners. It's a totally, totally okay thing to have the same signals week over week. Only if you just catch the one big move pound kiwi makes in a month and you're there and ready to receive it, you're in a good spot. And the rest of the month, pound kiwi could stay sideways or even go against you. And as long as you're not doubling into those losses, you're going to be just fine. So, okay, very good. So how do we do this? So what I would suggest is you come in here on Sunday night and or Monday morning and take the top five, not five, I would do 8. Well, you could do 5 if you wanted to. I like to do 8 just because that's about how many signals I get from Steve Scanner. But if you wanted to just take the top 5, I think that's fine. Um, what I would suggest is, and the other reason why I would suggest 8 is because this non-lot size calculator method that I made for Steve Scanner will work perfectly if you take 8 trades. Otherwise, you're living below your privileges if you just take 5 trades. That's why I would take 8, because when we get to the portion where we manage the lot size, this was designed for taking approximately 8 trades in a week. So because if you just take 5, you may want to take more leverage on if you're only going to take 5 trades to compensate for the 3 that you're not taking. And so you'll just need to put more money behind those 5 subsequent trades. So anyway, that's why I'm going to do 8. Okay. So you filter it like this. This is the fundamental score, and this will tell you what the top things are. So pound kiwi is the number one buy signal. Euro kiwis next buy signal up. Pound francs right there. And then you can also filter by negatives. So you got to pay attention to what the negatives are. Unfortunately, this doesn't show you like what trade one is, trade two, trade three. It's just showing you what the fundamental score is, and you have to filter it by negative. So when this says negative 26, this is a better sell signal, just overall signal, than say like this pound franc. This pound franc is plus 23, and that's still a really strong signal being plus 23, but being negative 26 is still a stronger signal than plus 23 is, right? So we just have to kind of keep that in mind. So what I would do is be like, okay, pound kiwi is the biggest absolute score. Okay, so that's definitely one trade I'm going to take out of the 8. I'm going to take this one because that's the second best absolute score. And then right here, I've got NZD CAD and NZD dollar at minus 26. I'll take both of those. Those are 4 more trades to take. Those are the next best scores. Then I'm tied at 23 right here with pound franc and with the NZD JPY. So let's add both of those, and that's going to give me 6. Okay. Then I've got a positive 19 right there. And then we go all the way down to 15. So we'll probably want to stay with this one at Euro franc. That will be trade number 7. And then we got CAD franc right here, and that will be trade number 8. So we'll trade these 5 if we were to do this at the beginning of the week, and then you would trade these top 3 right here. So that's kind of how I would pick your top 8 trades, is just kind of go through the positive and the negative side and take the most negative and take the most positive for a total of 8 trades. Yep, that's what I would do. And yeah, I would still try to diversify a little. A lot of these currency pairs, you'll notice, by the way, are going to be highly correlated. Like you'll notice here's like pound kiwi and euro kiwi. Here's pound franc and euro franc and CAD franc, right? Like all of those are franc currency pairs right there. So you're going to notice a lot of correlation. And so you're not super diversified because you're just taking 8 trades. Now, let me just give you a spill the secret sauce here. Diversification in trading is dumb. It's really not smart. I know when your financial advisor might sit down with you and tell you, hey, you need to diversify your portfolio. You know, you need to buy some bonds, you got to buy some stocks. That's all good. And by the way, those are great things, but definitely talk to your financial advisor when it's time to plan your retirement and stuff. But, you know, I'm not going to be your guy for that. I mean, I have my own ideas and I'll share my opinions, but just know that I'm not a financial advisor. And so, but I do know what the financial advisor would say. They're going to ask you to diversify, and they're going to tell you, you know, we got a portfolio that's tailored to your age and goals and so on, and which is great. But when it comes to trading, though, when we're trying to take an outright position in the market to make money, we're not really trying to be diversified. We're trying to be controlling and execute and apply pressure towards a direction. We are speculating a direction in the market, and then we're controlling how that plays out, right? So we do want signals that are diversified, because if I or not that are not diversified, if we were to have signals that were pretty diversified, then you're really not going to see a lot of progress, because you buy one thing and then you sell another thing, and you're just going to keep going sideways. So the whole point behind trading is to have an edge in the market like we have right here, and then exploit that edge to the furthest extent possible. That's how we make money in trading, is through not being diversified. So it is an interesting concept, and I just want to make sure it's pretty clear that, you know, just because everything's correlated doesn't mean you should be scared about taking the trades. It just means for that particular week that you're taking those trades, you know, these are the signals that you're going to have, and yes, they are correlated, and that's almost always going to be the case, and it's okay. That's totally part of the plan and the program. So now that we know the signals we're going to take from here, what you want to do is we got to take each trade. So I'm pretending that I'm, you know, at the very beginning of the week, and I'm going to take each one. Let's start with, since I have some analysis on the pound kiwi on my chart, I don't really want to mess with this, because this is also a price action trade that we're taking as a group. I don't want this analysis to convolute what we're going to study. over here and take. So let's do the Euro Kiwi just for practice purposes because I've got a naked chart over here. So this is one of the signals that we have to take per the macro scanner. And so, this would be trade number 2. So let's go ahead and take this trade. And we would just go ahead and click the buy button at the beginning of the week. Now, right here, we got to know how many units to trade. The units is basically how much of a lot size we're going to put in. Now, this is easy because if I go over here to the non-lot size calculator spreadsheet, I would suggest that you, and by the way, if you're on YouTube, just I'll probably include it in the description, but you can have access to this. This is non-proprietary. That's fine. But you may need to request it too. If you don't see it, just drop a comment in the comment section and I'll send this over. But basically, this is what we're doing for the this is what we're going to be doing for each account size. So rather than using a lot size calculator, this is already tuned up to make you the most money possible. So this is actually one of the things we were talking about back in September with the Steve scanner is we were saying, hey, everyone wanted to make a little bit more money. And so this is a money maximum calculator. So this is designed to use our sequence multiplier at 1.5 multiplier with the weekly trades. And it's also designed for the macro weekly trades. So all you'd have to do is just come in here and find the account size that you're trading in. This account that I'm trading in today is a 100K account. And so we'd start with week 1 at a 0.5 lot, which is the same thing as 50,000 units. If we were to trade, on week 2, we would go to 75,000 units. We're going to talk about when to go to week 2, when to go to week 3, and so on in just a moment. But let's just go ahead and start with this because this is our first week trading this. So we're just going to start with 50,000 units. Okay. So we're going to come over here and we're going to change this to 50,000 and we're ready to go. Although we still need to put in for the stop loss. You can skip the take profit. That's going to make things go a lot faster because we don't use take profits with weekly trades. Very important. I don't think we should be speculating where the top of the market is. I would much rather just let the thing go and see how much is possible. Kind of have more of an open mind to see what the trade can do by just letting it run until the end of the week. And then your take profit is more of a time. It's a time take profit than having a like an actual price target. So the goal is to hold on to the end of the week, and that's the take profit there. Okay, so as far as the stop loss though, this is required. Stop losses are a tool. They are an asset in our lives as traders, especially if we're taking outright positions. And back to the whole correlation versus non-correlation thing, since most of these scanners like Steve's scanner and the macro scanner are going to call out tons of correlated signals, in the event that the signal is not good for this week, we need to stop out and we need to take a loss on the weeks where things don't go the right direction. It's very important that we cut these if things go the wrong way. And we'll just come back the next week and reset. And I'll show you how to reset accurately and how to make the most money on the following weeks that come. But yes, it is. It's not like I just want to make sure it's very clear that stopping out is like a huge blessing. It really is. The fact that we can control where we get out of a bad trade, view that as an absolute asset. I know it's not fun to lose on a trade, but if we're losing appropriately, that's a huge pat on the back, and we should congratulate each other for doing that type of thing. But where traders get in trouble is they just feel so confident with like a signal. Let's say, these are great signals, and they are. Like, this is all using macro data and looking at interest rates and so on. And these are great trades. But that doesn't mean we can't we can't disregard risk altogether because everything's inherently risky. News events could change. Macro data can change as well. It's subject to change. And because of that, if we're just taking trades, even though the data looks good, it could change on a dime. And if we don't have a stop loss in place, we could get ourselves into a lot of trouble. So it is absolutely necessary, and embrace the stop loss because it will protect you in a big, big way. So what do you put in for the stop loss though? Is it like technically based? Do you go at the swing low? Do you go at, you put the stop loss, below a candlestick or something or whatever? No, it's even simpler than that. We just use an average daily range. And this is the same thing for Steve's scanner. exact same way for the macro scanner is what I would suggest. And so, and by the way, I know Lauren asked for this today, and I didn't do it over the weekend, so I apologize. So it's definitely something that's going to happen today. Is we're going to put an ADR on the macro scanner. So I'm not sure exactly where. We might do it right next to the pairs here to make it simple. Yeah, but somewhere on here we're going to add a column so that you'll have the ADR and pips. And what this will do is it'll make your life really simple, because the ADR is what you're going to be using for your stop loss. And it's also what you're going to be using for your spacing to add to winning trades. You're going to need to know what the average daily range is. So the average daily range currently is located, and this will change today. I'll have it available also on the macro scanner. But if we open up another tab, for now, just for the sake of the webinar, let's go get it over on Steve Scanner. There's a column right here, ADR. And if we search let's go ahead and search the Euro Kiwi, you can see there's the ADR. It's 128 pips. So it need to have another, as of right now, you just need to have another tab open until I get that on there. But 128 pips. And so that's what you would use for the entire week on this trade, is 128 pips, is just one average daily range. Okay. And the trade's like ready to go. In fact, let's just go ahead and take the trade. So I'm going to go ahead and click buy, and you'll see the trade pop up on my chart here. I've got a buy position on the Euro Kiwi, 50,000 units. Stop loss is down here. What's nice about this is it takes all the guesswork away as far as like where to put your stop loss. Like, should it go right here or should it go right there? Let's just not complicate things and just make it one average daily range. And you'll thank yourself later, because it's going to make your job and life very, very simple. Okay. Then what we got to do is, and technically you could just trade it like this. And this is how we've always traded Steve Scanner for like years, is it was just one trade, one stop loss, and let it rip. And it works. However, if you want to really amplify your profits, which we all do, one of the things, the changes that we made to Steve Scanner, like I think back in May or June is when we started doing this, is we started adding to winning trades, and it really pays off. This is something that's going to set you apart from the competition. Most other people, when they see a trade going in their favor, are not going to have the willpower or the courage to add to a winning trade, because it's hard. It is a tough thing to do, but it makes it a lot easier when you just do it automatically. So while you're setting up these trades at the very beginning of the week, I would suggest that you immediately just turn around and have the buy stop orders or the sell stop orders ready to go at the very beginning of the week. That way, throughout the week, if the market does go big time in your favor, it can just add into those trades without you even being present. You don't need to see it. You don't need to ask the market to do it, because it's already been asked, because you've already taken those trades at the beginning of the week. You don't need to do anything else. It just makes your life super simple. And what's so amazing about it is life is simple, and you're also trading in a way that most people wouldn't dare trade, because it's not there. There's a lot of fear when you add to winning trades, because there's this fear like, oh, I've got a trade that's 60 pips in my favor. Maybe I should take profit. Maybe I should run away. But then the fearless person comes along like you, and you've already got a trade ready to go 60 pips away that's going to get added to. And so, let's say you get added in on Tuesday, and then by Friday, both of those trades are up over 100 pips a piece. Those are the weeks where you're just going to absolutely come away with huge, just unrelenting profits that you can show off and show your buddies, and they'll wonder how the heck you did it. And you're like, oh, it only took me 20 minutes on a Sunday. And they'll be like, what? Yeah. Like, those are the profits you want to have, and they'll come. In a month, you're going to get like 1 to 2 times a month where the market's just going to go berserk. And it's going to basically pull what happened last week on the Euro Kiwi. It's going to do something like this. And throughout the entire week, you're going to get filled into, just trade after trade, a couple more trades. And you're going to wind up by Friday just as this just very, very successful trader by the end of the week. So adding to winning trades. So let's go through that process on how to do that.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So I think the most effective way to add to winners is to have a distance that you effectively add to winners. So the way I think the best way to do this is just to take the average daily range and divide it by 2. Okay? Because if you add every average daily range, it's kind of a lot to ask the market to go a full average daily range in your favor. It is a lot to ask, and even to get there by the end of the week. And I don't think you're not gonna make as much money if you push that out even further. So what we've concluded to do is just to take the average daily range, divide it by 2. So you can just pull up your calculator and be like, unless you know how to do it in your head pretty quick, you just take 128 and divide it by 2, 64, right? Easy number. So we go back over here and we take a measuring tool on TradingView and we go from the current price where we got in on this trade, and we're just going to go up 64 pips. And it can be close. That's about 64.2. That's close enough. And then I'm going to grab a little ray tool right here, and I'm going to mark exactly 64 pips up. And I'm going to mark that because that's where a trade is going to go. And then we got one more trade. I usually do 2 additional orders. And we're going to go up another 64 pips from that price. About right there is close enough. Mark another ray. Boom. Now I'm ready to go ahead and take 2 more additional buy stop orders. And you'll notice if I measure this from the current price, if I go up 64 there, that's about 64. Then if I go all the way up to there, that's about 128 or 129. That's a full average daily range away, which is on purpose. So now I've got 2 more trades I can go ahead and add. Let's go ahead and do it. I'm going to click the buy button. This time I'm going to change it to stop order. And because it's a buy stop, right? And now I need to put in this new field. This is going to be the price where I'm going to buy at. Well, we've got that labeled with this ray right here. That's 2.05 to, let's see. Oops, let me go ahead and type that again. 2.05 420. Now, why is that not 2.05 420? There we go. Okay, got it. And you'll see it'll come up to that price. You'll actually see it preview in front of you on TradingView, which is so awesome. Also, little side tip, this can get kind of confusing. When you're trading with a US based brokerage like Awanda or Forex.com, which is where I do a lot of my, that's where I keep my funds, my personal funds, is with Awanda and Forex.com. And so with them, because they're US based brokerages and they have FIFO laws and so on, I'm actually not allowed to take another trade with the exact same lot size as the previous trade that I just took. They'd actually, what would happen is if you left that open with another $50,000 unit trade, they would actually just close the trade on you and it wouldn't count. It would just go as it would go in history as a non-trade. So I know it's really dumb, but here's the way to get around it. You just delete 1 0 and add a one. So it's 50,001 units. And now it's a separate order with a separate lot size in the previous order. And now this trade can have its own stop loss. If we were to use a take profit, it could have its own take profit. And now this trade will trigger if the market were to get to that price by the end of the week, and it will trigger uninterrupted. And the FIFO laws and US based brokerage stuff is not going to become an issue for us anymore. That's all you have to do. Really simple fix. Then we skip take profit again because we don't use one. We have unlimited earning potential on these trades. It's very important to think in that perspective. It'll also open your mind up a little bit more when you think in perspective of opportunity rather than because the preservation stuff's already done, right? We've got a stop loss in place. We've got a sequence multiplier. As long as we're taking care of that type of preservation, now our mindset needs to be towards growth and making as much money as possible. So I think what happens to a lot of traders, I've seen this in myself and I've seen it with many other traders I've coached over time, is we get in this habit of, or I don't know if it's a habit necessarily, but it's in this like stuck mindset of like, I can't lose, I can't lose. And when you think in terms of I can't lose, you're only thinking about not losing and you're not thinking about the most important thing, and that's winning. Right? Winning is the most important thing, right? And so as long as you're taking care of, you've got an effective risk management system where you're using lot size correctly, and you've got a good place to stop out on the trade, and you're very diligent at taking the trades when you're supposed to take them and closing them when you're supposed to take them. Don't worry about the risk anymore because you've taken care of those things through your systematic approach. And now we just focus on the asymmetry of the possibilities, the opportunities that are now there. And now it's a growth mindset, and it'll open your mind. It'll help open up your mind a little bit if you've kind of caved into a preservation mode, which is good to have. I get it. There's got to be a little bit of that, but there also needs to be a lot of how much can I go? How much is possible, right? We have to think in that type of personality as well. Okay, so as far as stop loss goes, it's also just an average daily range, 120 pips. It remembers from the previous trade. We go ahead and click buy. And now that's ready to go. So now you'll notice here, I've got another buy stop order ready to go right here. And it's got its own stop loss right here. And this one's got a stop loss. This trade's not in yet. The only way that trade would trigger is if the market exploded in our favor, right? Now we got to do one final trade because I like to add a third order. You don't have to do a third order, although the way I manage the lot size matrix here and everything that's done in here is designed for 3 orders with 8 trades. So it's 8 signals, 3 orders per signal. It's a total of 28 or 24 technical trades that you're taking 24 trades each week. Let's go ahead and do this last one. So we're going to go ahead and hit the stop. And by the way, we're going to do another example. If you guys have time, we'll do one more example so I can go over this process again of what it's like to take for each trade. Okay, so we have one final trade to take here on the Euro Kiwi. We got this ray up here. We're going to click the buy button and we're going to change it to stop. Then we're going to go entry is this upper number now. That's 2.06062. And then I'm going to change my units from 50,001 to 50,002. Again, the reason for that is to give myself a separate lot size that's distinct from the other 2 trades. Okay. Skip the take profit, go straight to stop loss. And then again, just remember, it remembers from the previous trade is 128. We go ahead and click buy. And now that trade is ready to go. And so what I have here is a completed signal for the entire week. This is a week-long trade with huge potential, huge asymmetric upside potential, where if the market goes in our favor, we're going to trigger into one, we already have a trade. We're already exposed to that direction because we're already buying. We have another trade ready to go right here in case throughout the rest of the remainder of the week, the market can trigger that trade and this other trade. And then I've got stop losses down here. So what happens is if the market goes in our favor, again, huge upside potential. And technically it's unlimited upside potential. It depends on how far this market wants to go. Now, if this trade decides to collapse on us, and let's say it's just a bad week, which inevitably is going to happen, there's no such thing as perfect weeks every single week. We're going to have losing weeks. The best case scenario is this market will just kind of break even and do nothing. But in the event that it loses, most often what will happen is it will lose quickly and it will go straight to the stop loss by the end of the week or sometime, Monday, Tuesday, Wednesday. Usually I feel like my stop losses, if they're going to hit on like Monday or Tuesday is the most common thing. It's very rare that I hit a stop loss on like a Thursday or a Friday because usually by that point of the week, the market's decided if it's going to be a good week or a bad week. So you'll notice a lot of your losing trades will lose quickly. So don't be surprised if you wake up on Monday or Tuesday on the losing weeks and you're like, oh, wow, I'm down. Just just ride it normally. That's what happens. Unfortunately, there's going to be losing weeks like that. But the other cool thing too is you're going to have some winning weeks where Monday, Tuesday rolls around, maybe Wednesday, and you're just super profitable. And every day you wake up, you're a little bit more profitable than the previous day. I've had weeks like that. I had a week like that at the end of September with the Steve scanner before the government shut down. It was like every day I woke up that week and just more profits in the account, and we got to close those on a Friday. And it was super awesome because I made withdrawals from my forex.com and Awanda accounts, and it was super awesome. And that's kind of what paid my bills in October, was just that one week in September. So yeah, it's kind of fun when that happens. And if you've got prop firms that pay you, like that can really pay you big. So other scenarios, what other things that can happen? On occasion, you'll get the worst thing that could happen is the market goes and triggers all three of these, and then by the end of the week, it'll come back and lose. This can happen. It's unlikely, and it can happen, and we're prepared for that to happen too. Like there's there's obviously stop losses ready to go in case that happens, and it doesn't happen all that often, but it can happen, and it's not fun because you are going to lose some good money on that. Usually, if you're going to get up to the third level, there's a pretty good chance that at the very least this market will just kind of stay up here or maybe pull back just slightly and maybe close like right here for the end of the week when you're still profitable if that happens. um but yeah, this is called a round trip as well, where the market could go in your favor and then collapse against you, and it's okay if that happens. It's totally normal. The winning weeks will absolutely cover those back, and you don't need to worry about that risk. I know that it's possible, but we've got provisions in place for that to happen. Okay, so this is what you do with the this is how you set it up. Now you got to do this for every single signal that you trade. So this could take you an hour on a Sunday night or a Monday morning. Once you get quick at it, I think this could take you as little as 10 to 15 minutes. That's how long it took me last night. It was just 10 or 15 minutes to do this across 8 different signals and a total of 24 trades, 16 buy and sell stop orders, and 8 market orders total. So let's go do this one more example. And then what I got to show you next is I want to show you guys how to handle after a losing week, what to do with the lot size. In fact, let's actually do that now. And then I'm going to show you another example. So let's pretend that we just had a losing week. Let's say it's Friday and we lost money. So one of the ways we come back at the market is we use the sequence multiplier. It's a type of martingale, but it's very, very mild. It's the most mild version of martingale you'll ever experience. And one of the reasons why it's so mild is because it uses a taste of martingale, but also the fact that we add to winning trades is kind of what sets this apart and different from anybody else. I don't know anybody that does a hybrid of martingale and anti-martingale at the same time. This is, martingale right here on a week to week reset basis. But then over here, when you're adding to winning trades, this is a form of anti martingale where you're adding to winners. So the exposure only increases if you're making money, which is beautiful because it basically is the recipe to keep drawdowns small, but then have explosive wins. Because again, the only way you get exposed to the market is if you're already in a winning position. We don't ever expose ourselves like a lot of other martingale systems do. When they lose money, they often take on more risk after, like, they're already in a consistent current drawdown, and then they increase that exposure. Ours is the opposite of that. And I think it's very important way we manage risk with this, because it gives really consistent results. In fact, if while we're on that, let me actually show you guys. This is one of the accounts where we've been tracking the weekly trades from Steve Scanner. I know it hasn't taken any trades since, first week of October, because, obviously the government's been shut down and we can't trade scanner signals. But right around here at the beginning of August is when we started using the sequence multiplier method, the exact method I just taught you right now. You can see the drawdowns can last a couple of weeks, but they're really small. Like it's just a few percentage point drops. And then you'll have a week like this on August 14th that takes you to, August 22nd, where we go from a 21% gain on the year in just 1 week. It goes to a 31% gain. So you get like a 10% gain in 1 week. And that's because of the explosive gains. And then this starts to draw down over the course of the next 2 weeks. It goes from August 22nd down to at 31% positive, down to 29% positive on September 10th. And then this thing explodes out of here into huge profits. It goes from 28%. And then over the next 2 weeks, this thing goes up to 40 something percent. And I have no doubt that if we had continued in the month of October, we could have taken that to new levels. And so that's exactly what we're doing right here with this sequence multiplier. It's a combination of mild martingale on a weekly reset, which by the way is much better than a daily reset, because if you're doing daily resets, usually those drawdowns can get pretty gnarly, because the market can get stuck in drawdowns for many days, or in not drawdowns. The market can get stuck in doldrums for many days in a row. So if you're just doing a weekly flush, that will put you in a really good spot. I talked to the AI about this concept, and AI is all over this, like big time. And then the fact that you're only increasing exposure on the event that the market actually goes in your favor is that other layer that just kind of makes this just perfect. Hope that makes sense. Anyway, I try to make it as not complicated as possible. And you don't necessarily need to know the whole behind the scenes, because I love talking about the cleverness behind this concept. But I've also noticed, if I'm going to try to help a lot more people learn how to do this, I have to try to teach it a lot simpler. But anyway, so for now, all you got to do is just know the process. So now let's go through that process. So let's just say we had a losing week. Now we got to move up to week 2, which is going to be 0.75%. Not percent, that's 0.75 contract, which would be 75,000 units. So let's do this for a sell trade this time. And let's go through that process. Let's filter this by, let's do the New Zealand dollar, because I don't think I have any analysis on the New Zealand dollar. So let's go use that one. That's the second best sell trade to take on the macro scanner. And let's pull that up. Okay. And let's go ahead and take a macro signal for the week on here. So what we'll do is we'll go ahead and click the sell button. First trade is a market order at the beginning of the week. And again, this is assuming we just had a losing week across all of the collectively. Now we got to come back and run the table again and see what we can do. 75,000 units. We change the stop loss to an average daily range. We can find that on Steve Scanner for now. Eventually it'll be on the macro scanner. This is for the NZD dollar, and it's 54 pips. So we just go back over here and type in 54, which is already in there. It remembers from the last time I took a New Zealand dollar trade, probably last night. And I'm going to go ahead and click sell. And boom, the market order is ready to go. Now, I'm not done, because we got to do the anti-martingale side where we add to winning trades, right? And so what we're going to do is we're going to take a half an average daily range, which 54 divided by 2 is going to be 27, right? So we would go 27 pips down from here, from this current price. Right there, I'm going to draw a little horizontal line right there. Boom. And I'm going to do one final one. We're going to go 54 pips down from the current price, approximately right there. Pretty close. Doesn't need to be exact. Like Marty's not here, but Marty would say close enough for government work. So that's exactly what I would suggest right there. And then Perfect. So now you got your two rays in there. So you got references on where your sell stops are going to go. So again, there's no guessing as to where you're going to add to a winning trade. Should I add to a winning trade here or should I add it? No, it's just done on a fixed schedule. So these are solid principles, guys. Like adding to winning trades is a principle that puts you on the winning column. In fact, when you read that Tom Hogard book around minute 46 or more, minute 47 of his book on Audible, if you want to go back and read, listen to that for those of you that have that book. Yeah, minute 46, minute 47, he unveils a study that they did at their brokerage at IG where they found that the number one thing that puts you on the winning column versus those that are on the losing column, and it's those who add to losers and those that don't. So if they wanted to find out like who's the most profitable traders, is it swing traders, is it long-term traders, is it scalp traders, what are people doing? And they couldn't really find a consistency other than there was one really distinct statistic, and it was that if you were a winning trader, most of the people who had winning accounts where their accounts were positive from where they started at IG, these were live accounts. They found that the people who were running live accounts and who were making money and pulling money out of the markets were those who were adding to winning trades. And then the one statistic that was very clear is that people who consistently added to losing trades eventually blew up their accounts and they quit trading altogether and had a sour experience as a trader. So, and I thought that was just remarkable because I think about it and I'm like, yeah, I mean, I had to ask myself a real conversation. Am I adding to winning trades consistently? And I think doing this with, at least with Steve's scanner, that's been the main place where we've been doing this since, I read that book and we implemented it right away and we did it on a fixed schedule. The results have been just like insanely awesome. So that's why I'm always about, now I'm like, okay, I see the truth now. Okay, I see what he's saying. Right. So we got to figure out a way to do this on schedule. There has to be a way that anybody could do this without guesswork. And I think this is the easiest way to do it without any guesswork that's appropriate for each pair and the strategy that we're trading. Okay, so with that, let's go ahead and add to our winning trades at the beginning of the week. So now we're going to go ahead and click sell again. And we're going to change this to stop order. And we're going to change the price on this down to here, which is, we've already labeled it 0.56186. You can see it lines up and it previews on TradingView, which is so cool. We're going to change the units by 1 because, again, we got to be broker compliant with US regulated brokers for those of you that live in the United States. If you don't, like, if I know we got a lot of people that watch this from Australia, New Zealand, and across the pond in the UK. So if you, or even in Africa, we got quite a few viewers there. So if you're watching this and you don't have a US regulated broker, you can just ignore that part and you can just keep trading the same lot size. Doesn't matter. Okay, then you go ahead and put in your stop loss. And again, it's just an average daily range. You go ahead and click sell. Boom. That trade's now ready to go for the week. We got to do one final trade down here. We're going to go ahead and click sell again, change it to stop. The price on this is going to be 0.55916. And again, it's just this price down here. Change the units by 1 unit and then skip the take profit, go straight to the stop loss, add a 54 pip stop loss, which is an average daily range. Click sell and boom, that's ready to go. So that can go pretty quickly. Once you get in the rhythm of this, it can go quickly. I like to go quickly. And then what I do is I go back and check my work once every single trade has been taken. Like I can go back and check it. And what's nice about this is, again, what did we just do? We just took a trade from the macro scanner for the whole week. We're going to close this trade on Friday. And this is assuming that we had a losing week the week before because we've moved up in the sequence multiplier here. As you can see, each trade is 75,000 units instead of the 50,000 from the hypothetical last week that we were just trading. And if this week were to win, let's say, the New Zealand dollar just had a great week where it just collapsed and, just went in our favor big time. Well, we'd make a lot of money on this trade. We'd make a lot of money because not only did we cover the losses from last week, but we're now doing it through two different means. We're doing it because we're adding to winners, and we're also doing it because our lot size is slightly bigger from the previous week. All of those variables combined result in explosive, very, very profitable winning weeks and very mild losing weeks and consistent losing weeks too, which that might sound like a bad thing, but I would rather take a consistently, like, I want my losers to be consistent because I don't require that I win on every trade. Like a lot of retail traders kind of seem to have that expectation to win all the time. And the reason why I believe that most retail traders have this expectation to win all the time is because they act like that. The reason why I say they act like that is because they're not using stop losses for the most part. Like, I had a retail trader explain to me the other day, he's not a member of our program, and I don't know if he'll ever be because I just, the way he trades, he uses like this 35 pip stop loss and a 2 pip take profit on each trade. And I kind of feel sorry for the guy because I've been there and I was there for years where I would just take these little sips out of the market. And unfortunately, unless you're just this most prolific trader and know exactly how to get out of bad trades before they hit your stop loss, for most people, that's just never going to be a reality, where you can just get away with these really small losses and then, or excuse me, get away with these really small take profits and hope, cross your fingers that you don't ever blow up your account on a losing day, right? That's just not going to be the case. So what's nice about this, what we're doing is you're going to have losing weeks, but those losing weeks are going to be about the same. And then your explosive weeks are just going to be through the roof, and they could vary too. That's the one thing that could vary because you're not using a take profit, is the winning weeks could be extraordinary. Most of them will be extraordinary, but it's just to what level they are, is the key. So the hope with this pair is that it just goes through the floor and it just goes all the way. And if you had a big winning week, what you would do is the next week is you'd go back to 0.5 as week one for your lot sizing. If you had another losing week, you go up to week 3. With the weekly trades from Steve Scanner, I've never had to go over week 3. That's the most I've ever gone to. But there is provision there to go up to a week 4 and a week 5 if needed. I don't think you're ever going to need to go up to a week 5, not even close. In fact, because of that, I've even considered maybe tightening this up and just making 3 or 4 weeks the cap, because I don't know if you'll ever need to go up to week 5. So, any questions on this? I think this is a pretty good webinar. I hope I'm going to probably post this on the Macro Scanner website or page so that other people can view this and know exactly how to trade this. This will get up on YouTube as well. But yeah, I'm really excited about this. This is, and then the other thing too is I'm going to give you guys, I'll post it in Telegram, but today I'm going to set up a MyFX book to track this. I've already opened the account and I've already taken the trades for the week here, but I'm going to send that over. And what's nice is with MyFX book is you guys can actually go through the statistics. Like, you guys can actually open up the order history and view, like, okay, how did this trade do? How did this trade do? You can kind of go through here and be like, oh, those are winners, those are losers. Let's see, did I do it right? Did I do it wrong? Like, that's going to make your life really simple and really nice. So, okay, awesome stuff, guys. Well, let's have a fantastic week. Thank you for coming. Have a great rest of your day, and we will see you guys in the next webinar.